Gunjan, thank you so much for joining us today. It's a real pleasure to have you.
It's very nice to be here, Jamie. Thank you for having us.
So Gunjan, let's start with talking a little bit about you, who you are and what you do at US Bank.
So I lead the wealth management and investment services business at US Bank. And US Bank, for your audience, if you don't know us, is the fifth largest bank, fourth largest retail bank. So it's a very nice franchise.
So let's talk about the wealth management business. And what I'd love to talk in particular is about how the business model has evolved. So going back 2 or 3 years, what did the business model look like and where are we today?
Well, let me go back more than 3 or 4 years because it explains sort of the genesis of our business model. Once upon a time, there was a bank and there used to be a trust company of a bank. And what we did was really trust work. It was trust funds and how to do wealth transfer. So that's sort of our legacy. It tends to be concentrated on the higher end of the business. Of course, today it's a very different business. We serve all segments starting from your first $1,000, which most people think is a less complex investment, is possibly the most meaningful investment decision a young investor makes, and all the way to family offices.
So I think that's what, and sorry if I could jump in, that seems like one misconception right off the bat, that wealth management is a product for the more mature person who's perhaps accumulated quite a lot of wealth. But what you're saying is you can start really with just $1,000.
Yeah, because wealth is so subjective, isn't it? Because the person who has their first $1,000 to invest, it is wealth for them and it's important and it's very meaningful. And then there are people who have, $4 billion and it's meaningful to them too. So it is really wealth as you define it. And we want to be able to provide advice across the spectrum of investors. I would say if you ask me what has changed the most is at one point, wealth management was very much about investment management as the product set and what do you do with the actual money that you're investing. Today, it's more about helping you manage your life and wealth has a part to play in it.
That's a very interesting distinction. Very
advice-focused business now. Yeah.
Is it a more personal business than it used to be, to the extent that, if 10 years ago, I'm just using an example, 10 years ago I had $100,000, you would advise me where to invest. But nowadays you would perhaps get to know what stage of life I'm at, if I'm married, if I have kids, and you would also give advice along those lines.
Well, let me think about that because, money is personal. It's a very personal thing. In fact, there are people who would talk about their health, they'll talk about their marital problems to their friends, but not about their money. Just think about the society we live in.
Yeah.
So money is very personal. So, the advisor has always played a very specific role. What has happened now is the advent of technology and information has allowed the advisor to engage with our clients on a broader topic without being limited by your own ability to sort of understand issues. So, for example, could you really advise your clients on mortality rates and how much they're likely to be able to spend on healthcare? But today we can, not because the advisor just knows these things. It's just they can look it up and we can support the advisor with data, with analysis, with tools. So it has become broader just because we are able to make it broader. It was always very personal.
So can you talk a little bit about how your clients have changed in terms of what solutions they're looking for and what kind of different products you're offering now?
Well, I'll tell you the basics of equity research they have in their fingertips because they can look up and they have access to a lot of providers' insights. So there's a level of commoditization on some things. They can study a mutual fund equally well. So the nature of the discussion changes a little bit from sort of let me explain to you what a bond portfolio might look like or what a muni bond ladder can do for you, because many of them come with a lot of information on their fingertips. Also, what used to be the level of engagement model, which is let's review your portfolio, most of our investors can do that on their platforms and a lot of them see it daily. So the interaction model has changed a lot more to what are you trying to do with your life, what's important to you, what would you like your money to achieve for you, what do you fear, what kind of shocks are you able to tolerate, and people don't know these things. So it's our craft, if we do it well, is to try and help them understand themselves so that we can do a plan for them that is fit for purpose.
It sounds like you're almost asking questions to your clients that they haven't even asked themselves.
or helping them explore dimensions that are relevant to a financial plan that they may not have sort of expected. When you have a young family, for example, they have young children, and you say to them, what do you think happens to the children if both of you die in an accident? They don't want to talk about that. It's our job to help them think through that, because life happens. So sometimes it is cajoling into facing up to things that need attention. I have never met a client who says, yay, let's do trust documents.
Right.
So some part of it is just sort of giving them discipline that life demands a little bit of organization. So whatever the client needs, it's a matter of helping them organize the financial aspects of their life, both sides of the balance sheet. We are a bank, so we do credit very well. Sometimes that plays a very important role. Wealth transfer and tax management, that plays a very important role.
So I wanted to ask more about your clientele and how it's changing. I wonder if you're getting more women as clients, more minorities.
Well, I can actually answer that with some precise facts, because we've been doing some research to understand attitudes towards wealth management and investment management. The first study we did in 2018 and 19 would show a significant gap in engagement between how women engage with their money and men. The good news, though, is that when we did the same research this year, we are seeing that gap shrink quite a lot for younger women. As we progress, you'll see a lot more minorities, just given what's happened, the makeup of the country, and a lot more women sort of really engage with their money.
Sounds like the trends are heading in the right direction then. And speaking of trends, what's your one prediction for 2023 in the world of wealth management?
I think caution will be the sentiment of the industry. It's been quite a turbulent 2 years, a very big set of stock market returns in 20 and 21, and then very traumatic turbulence in 22. So we would expect that the investor's mindset will be very cautionary.
Well, Gunjan, it's fantastic to be chatting with you today, and thank you very much for your time.
And thank you for doing this.